Hello and welcome. This is Business Incorporated coming to you live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwagu. On the program today, Nigeria and South Africa exit economic recession in the second quarter. And credit rating agency Moody's says the ruling by Kenya's Supreme Court is a credit negative for the East African country. Plus, Nigeria's National Council on Privatization approves the privatization of AFAM power plants. Let's get started now from Nigeria. The country is finally out of recession as data on the country's gross domestic product released today shows that the economy grew at 0.55% in the second quarter of 2017. Now, this is 2.04% higher than the rate recorded in the corresponding quarter of 2016 and higher by 1.46% points from rate recorded in the preceding quarter. The Statistics Office attributes the economic recovery to the performance of four main economic activities comprising oil, agriculture, manufacturing and trade. Oil GDP recovered significantly from minus 11.63% in quarter 2, 2016 to 1.64% in quarter 2, 2017, while non-oil GDP grew marginally at 0.45%. Agriculture grew 3.01% in quarter 2 2017 from 3.39% in quarter 1. Manufacturing retained its positive growth for the second consecutive quarter in Q2, growing at 0.64%, while trade, which has a dominant share of GDP, remained negative at minus 1.62%. Meanwhile, Nigeria's Manufacturing Purchasing Managers Index for August shows a healthy improvement of 58.5 from 56.3 in July. Investment and research firm FBN Quest reports that 4 of the 5 sub-indices picked up within the period as all indicators remained positive, sustaining the headline reading above 50 since March. Among the sub-indices, employment remains above water for the third consecutive month, while a strong reading of 58 is seen for the new orders parameter. FBN Quest attributes the improvement to the forex policies of the central bank, which has boosted manufacturing inputs. And in South Africa, the economy exited its second recession in almost a decade in the 3 months ended June 30 after agricultural output surged. Gross domestic product increased an annualized 2.5% in the second quarter compared with a revised decline of 0.6% in the previous 3 months. The Statistics Office says in a report released today, the economy expanded 1.1% from a year earlier. Low demand for the country's exports and political turmoil that's caused instability have weighed on output by Africa's most industrialized economy. Our S&P Global Ratings and Fitch Ratings Limited cut the nation's international debt to junk in April after President Jacob Zuma fired Pravin Gordhan as finance minister, with the changes roiling markets and battering business and consumer confidence. However, the central bank cut its benchmark rate for the first time in 5 years in July, citing concern about the growth outlook. Moving now to the intraday markets. The first trading day for the Nigerian Stock Exchange after the Eid holiday is experiencing some technical glitch as the numbers are unchanged at intraday. However, in South Africa, the positive GDP number did not rub off on the market. The JSE index was down 0.18%. Egypt was also down 0.11%. And in Kenya, the market was unchanged on Monday. PMI data shows today Kenya's private sector activity slumped in August, mainly due to worries over a tense presidential election held on August 8, whose outcome has been invalidated by the Supreme Court. In the Middle East, markets in the United Arab Emirates were all down at intraday. Looking at those numbers there, Abu Dhabi down 0.06%, Dubai down 0.30%, Qatar and Saudi stock exchanges are still closed for the holiday. In Europe, markets were higher in morning trade as investors brushed off lingering geopolitical concerns and directed their attention to deal and a number of data out from Europe, including the PMI numbers. Let's cross over now to Frankfurt for details from Janelle Dumalon, my colleague there. Good afternoon, Janelle. Thank you again for joining us. Now, let's begin with the Europe, where the latest PMI reading for August was largely unchanged, pointing to a modest easing of growth in third quarter. Squeeze the third quarter PMIs together for us. What picture do you see?
Hi, out of Frankfurt, where European markets seem to be behaving a bit better today. They're cautiously shaking off all the tension that we've seen yesterday. But yes, going on to the Eurozone numbers, business activity in the Eurozone actually stayed quite robust in August. That was only a marginal slowing down that we saw. So it's underlining the story that the Eurozone is having an economic recovery that's seen as pretty much sustainable. So if I can read you the numbers, the final composite PMI for August was held steady at 55.7, and that's only slightly lower than the forecasted 55.8. And if you remember, a reading above 50 is considered quite good. That is what separates growth from contraction. Now, the services PMI, on the other hand, fell to a 7th-month low, 54.7 compared to 55.4, but that still constitutes one of the best growth rates in over 6 years. So really no reason to complain there either. And the new business index also fell, but it still outperforms its more long-term history. And when it comes to the Eurozone reading of the GDP, we're looking at 0.6% growth for the third quarter, matching second quarter growth and faster than the 0.4% that analysts had previously predicted. So all in all, like I said, these data underline a picture of a Eurozone that's really recovered strength since the financial crisis 10 years ago. And given that, given more economic growth, that actually weakens the case for more stimulus.